quota filled. Alright, what's good everyone? Welcome back to a new YouTube video. In this YouTube video, we're going to be breaking down how I got just over 200 points trading NQ. Now, NQ, this trade was simply based off of playing continuation, based off structure, based off ranges, and we're going to be giving a in-depth trade breakdown in regards to every little aspect of it, in terms of the power 3 aspect, in terms of the top-down analysis power 3 aspect, in terms of the daily power 3, and then how the 4-hour power 3 played continuation, and then of course how time-based ranges had played a role in this. Additionally, I had posted this all in my public analysis channel, which you can find in my server. So you can find this public analysis. This is completely free. I post this in a few servers, but most notably my own. And essentially I posted that we were looking for EQ of the October range. I stated that all the way back here on the 4th. November 4th, 2 days ago, and finally we reached it today. Initially 2 days ago I thought we had in fact reached it within the same day, but we actually had missed it by a few points, which is why I'd stated that that was still my drawn liquidity, and we ended up coming back down to there today. But as you guys know, I'd taken a loss on shorts on the 5th because in fact I was looking for price to come back down into there. Took a loss on that, but we got our get back today and now caught over 200 points. So we're going to be giving a in-depth breakdown there. And before then, we're going to be showing you guys the trade recording and then give the in-depth breakdown afterwards. So I'll catch you guys all then. right, so hopefully you guys all enjoyed that trade recording. Now we're going to get into the analysis that I posted publicly first. So overall, we'll start off with the very first thing that I've said this week. And this week, I made it very clear that within a hard time frame, we are currently drawing towards, obviously, we already stated that hard time frame structure is bullish, but most important aspect to understand right now is where price is drawing towards, because right now what we're doing within our monthly and weekly power 3, we are manipulating. We are manipulating to then play continuation of, again, monthly and weekly power 3, both of which are manipulating. Why are we manipulating? Simply to play continuation of our, excuse the mess, so actually just go remove that, to play continuation of our yearly and quarterly power 3. And actually I'll do you guys a favor and show you exactly what that looks like. So our yearly and quarterly power 3. What do we mean by playing continuation? Well, when it comes to the top-down analysis of our power 3s, based off of what our higher time frame power 3s are doing, we can then anticipate what we want to see our lower time frame power 3s do. So within our yearly power 3, we've talked about this time and time again throughout multiple different YouTube videos over the last few months. But within our yearly power 3, accumulation, manipulation, and distribution. So we're actively distributing within a yearly power 3. So going into our quarterly power 3, what we want to see is continuation of that. And our most recent quarterly power 3 open was at the beginning of October, all the way back here. And price had accumulation. Again, this move higher on a lower time frame I classify as accumulation, manipulation on the 10th, and since then we've been distributing higher. Now, if we understand that a yearly and quarterly power 3, both of which are distributing higher, then going into our monthly power 3, we want to see continuation. And since this week is the very first week of the month, they are both the exact same. So within our yearly and our monthly and weekly power 3, we want to see continuation of those. And in order to properly play continuation, we need to see manipulation. And I'd stated that the manipulation, the draw for the manipulation is going to be either EQ of this range, in which I have drawn right here. Either this range, no actual significance in terms of time is referenced here. It's just an unbalanced range, but the actual significant range is going to be the one that is all the way back here. And I excuse the little mess here. I just don't like to remove the notes on my chart from weeks back. But our October low to October high, giving us a time-based range as we were referencing the previous monthly power 3's EQ, the EQ, the high, and the low. And that gave us a drawn liquidity. And that is what I posted early on the morning of October 4th, which was Tuesday. And as I was anticipating us to come back down to there. I'd taken a short on Tuesday, and so on. Leads us to today, or actually the end of yesterday, or the end of Tuesday, my bad. So the end of Tuesday, and this end of Tuesday, aka Tuesday night, which is also the Wednesday daily power 3's open. Initially, I was under the impression that in this manipulation down, we in fact had reached EQ, but when I zoomed in, we actually had missed it by a few points. And again, when it comes to how we trade, how I trade, I don't really care what banks and institutions think. In my eyes, based off what I've learned from ICT, is that yes, the market is indeed ran by an algorithm. And we know that the algorithm is precise. It doesn't just miss an EQ. It doesn't just miss a certain objective by a few points. No, it's precise. It runs these targets for a very, very specific reason. And because even though it's just by a few points and it's such a high time frame range, even though we miss it by a few points, we have to come back down and reference it. And that's exactly what we had done today. And now the biggest aspect, the biggest issue today as to why so many people were unable to catch shorts is simply due to the fact, and we're going to turn off these indicators and show my triad chart, is simply because when we look here, when we look at the development of our daily power 3, we have our daily power 3 open all the way back here at Wednesday 6 p.m. Daily power 3 open, accumulation, manipulation, distribution. Looks pretty classic to be bearish, almost could have been bullish as well. In fact, I was initially bullish going into the morning just because of the 600-point reaction that we had seen shy to it. But with how much displacement we're getting, I flipped my bias midday. But the biggest issue here was the fact that all three indices are in sync. When we zoom in at the high of the day, there's ultimately no SMT whatsoever to support shorts. As we can see up here, not even with a 1 minute candle. There's not even a cracking correlation with your previous 1 minute candle. Every single asset here is perfectly in sync. And as we know, we want to see SMT at the high and low of the range every single time we either long or short. The issue was that there was no SMT whatsoever. So fear, why did you take a short even though there was no SMT at the high of the range to initially support it? Simple. Not every single move is going to have SMT, but every single significant move will have SMT. What we can take note of here is that if we understand that we are within the manipulation stage of our weekly and monthly power 3, more or less the monthly power 3 because the weekly power 3 is about to end and I'm likely to put in a new high of the week all the way on a Friday. But if we understand that we are within the manipulation stage within the monthly power 3, we can understand that price is going to engineer liquidity at the highs. And as we know, every single high without SMT is simply just engineer liquidity. So what we can bet 100% is that by the end of the manipulation stage of our monthly power 3, we will have SMT at the lows. We will in fact have SMT at the lows. And we are in fact going to run out this high. But on a short-term scale, if we know that price is likely to engineer liquidity at the highs in a relatively bullish market, what we can anticipate is that high to stay intact until we reach our drawn liquidity. The reason that we can be convicted with this staying intact is just based off simply the momentum and displacement that we've gotten so far within our daily power 3. So leading up into this trade, we have to understand what price has done already. We've already displaced down 400 points, invalidated any sort of bullish scenario. And what we're clearly drawing to and what we're clearly dropping for is to drop all the way back down to the October range EQ. The October range EQ, which perfectly has engineered liquidity right above it. Again. And now actually we can show, we'll stay on this chart. We'll draw it out here. The October range EQ perfectly below the previous day low. As you can see over here, if we were to draw it out, as we can see, previous day low perfectly engineers liquidity right below it. So clear, dead set drawn liquidity. No questions were really asked there. Clear drawn liquidity. On a higher time frame, we can understand that drawn liquidity must be met before we can continue higher. And so understanding that, we then look for continuation. And fear, how do you play continuation? By waiting for significant time openings. All I did, again, I kept it very simple. All I did in this scenario was understand the development of our higher time frame power 3s. So our yearly, quarterly, both are bullish. But first, in order to continue those, our weekly, monthly has to manipulate. So by understanding that we're currently in the manipulation stage, so bearish within our weekly and monthly power 3 as of now, we can anticipate our daily power 3 to continue. Now, even though I was initially bullish within our daily power 3, we have proven to be bearish. And if I understand that the daily power 3 is bearish, we're aggressively displacing, then going into our 4-hour power 3, we can anticipate that to continue the daily power 3. And now we can get into the 4-hour power 3. 4-hour power 3 opens all the way back here at 10 a.m. We open, as I'm going to draw out right here. We open and leave behind a 10 a.m. Devil's Mark. I don't actually have a video on my YouTube about this, but those who stay up to date on my social medias, I've done a few lessons on a Devil's Mark, but specifically on YouTube, I haven't done an official lesson, but I've mentioned it in multiple videos. Anyways, it's essentially a power 3 opening without any sort of wick or manipulation attached to it. As we can see, we open and immediately displace lower. So obviously, all we have to do is wait for price to put in that manipulation. And that's exactly what price does. Price runs above the 10 a.m. open, also tagging this 15-minute imbalance. Nothing significant about the 15-minute imbalance. It just acts as a higher time frame PD ray. What is more significant is the fact that as price trades into there, above the 10 a.m. open, above or into that 15-minute imbalance, what we then do is then trade into this overlapping NUWOG/NUDOG. as we can see, new dog from the 4th, and it was labeled as a new log. Hold on, it's turned off, that's why. And then the new log from 2 weeks ago. And so we trade into that. We trade into the overlapping new log / new dog above the 10 a.m. open, inside of the 10 a.m. inbound, or a 15-minute inbounds, and on the 1 minute time frame. As price is testing that overlapping new log, all we do is form a crack calculation with the previous 1 minute candle high. And from there, I didn't enter initially, just as this was not an official CISD entry. But what we ended up doing was just develop a little bit more structure. That structure to me was this. That extra structure was okay, even though this is not an official CISD. It's still a bearish signal, and extra confirmation for me is what I classify as a continuation CISD, which in my eyes is when price already has the original CISD, even though this isn't the original CISD and our official one is back here. What I kind of consider a continuation CISD is when we form an up close candle in bearish momentum, you could classify that as, and then we close below it. And that was essentially my entry for shorts. Entered roughly there. I think I got filled around there as price was displacing down at like a 33-point stop loss. And then of course TP was at the October range EQ. And then of course, as price was playing out, I in fact had trimmed just at low of the day, simply just to lock in profits, and pretty much that's it. Even though I have a stronger on liquidity lower, obviously I have to lock in profits, and that locked in just under 100 points. Ultimate draw liquidity was just over 200, and honestly, very clean, very efficient trade. And this is a perfect example of how you can trade the 4-hour Power 3, how you can trade, yeah, exactly, the 4-hour Power 3. I haven't really done a video on the 4-hour Power 3 itself, and in fact, when it comes to quarterly theory, this is one of the trades where quarterly theory didn't really have a strong impact on this trade. It's more or less just playing the momentum of the daily Power 3 based off what the 4-hour Power 3 had given us, and that is pretty much it. Again, nothing too complicated there. And then additionally, I had taken a long position, as we can see right here later in the day. Now you can see I'm in with 5 micros this time around, and that's simply because I was playing continuation and not the smart money reversal. And additionally, I was at the gym, so I was not able to be fully locked in here. Anyways, after price had ran out our drawn liquidity, so that is about right here. After we ran out our drawn liquidity, waited for the next significant time opening, which was at noon. Noon hits, and we form SMT with YM, as we're going to show as we move forward here and show that over here. We form SMT with YM. As we can see very clearly, YM puts in a failure swing, and QES both run out the low. From there, we displaced, as we can see back here. Initially, we got an official 1 minute CISD, which was a lot of my students' initial trade. Like dozens of my students took this trade because it's a perfect example of what my model is. However, I was not home. Missed this initial entry, and in fact, most of them had gotten broke even. I was at the gym during this time, and essentially I looked at my chart. I'm like, okay, that is a beautiful setup, playing out perfectly. And then all of a sudden, I started to see us aggressively start to manipulate lower, or in the moment, expand lower. And in this expansion lower, initially I wasn't going to take anything. I was going to wait to trade again to potentially take a long until after 2 p.m. once I would have gotten home. However, I was like, okay, what do we just do here? So in this expansion lower, what we did is retrace back into OTE of this expansion range. While we're retracing into OTE, what we then end up doing is mitigate that initial order block, which was your CISD entry. For not order block, it's technically not an order block. We can classify it as a wick. Again, when it comes to order blocks, it's a little bit iffy whether or not you want to classify the wick or the body itself, but nonetheless, we traded into the closure of where the CISD initially occurred. While doing so, we then test that 1 minute time frame back here, then form a crack correlation with the previous 1 minute low, as you can see down here. As we're testing OTE, or as we're testing the 0.79 mark of the OTE, while trading into that initial order block. From there, which would have been my initial entry had I been on charts at this moment. From there, then we displace, get a 1 minute CISD, and that initially would have been my entry. Now, there was additional quarterly theory confluences, which again, I'm not covering on YouTube videos. There's additional quarterly theory confluences in which I was confirming, as since I'm trading on my phone, I have to flip back and forth between multiple charts to confirm that what I'm seeing is correct in terms of the correct calculations. And so I got a little bit of a late entry, which is why my risk reward here is only a 1 to 2. Had I got my actual entry, would have been a 1 to 3, and I had TP just shy of the microcycle high. Really, I was drawn towards the 1 hour inbounds, but nonetheless, my trade was a 1 to 2 risk reward here. My short position was a 1 to 6 or just over. And that is a general review of today. So obviously, if there's any questions, comments, concerns, list those in the comments. Otherwise, I'll catch you guys all in the next video.